So on the ALA strategy, as you all know that we are using the session by Lux Algo, and we're going to remove the London session so that we remain with the Sydney, Tokyo and London, meaning that we're remaining with the Asian and London session. And one more tool that you're going to use is the volume profile. So yesterday I took the volume profile and marked the starting or beginning of the day to where the London is ending. Yep, right there. Okay, after doing that, I got my support and resistance. My support and resistance, let me put right there. My support and resistance. My support and resistance. So the other thing that people don't know about the ALA strategy, meaning the Asian London analysis, is that when you get your support and resistance, what you're waiting for is the market to do this, just to come back here, hit this level, then go back to your support. This is what I was expecting. The market did the same thing, but when it reached at this zone, it then reversed, going up. So this strategy is a 95% win rate, but you can make it 100% win rate by following my steps. So if you did that yesterday using this strategy, then you mean that you made a loss yesterday, because this strategy starts from where this Asian begins, where to the London, and from the London we are getting our support and resistance. But the time that you're supposed to hold your trades is from where the London ends to where the London ends to where the London begins. At this point right here, you are supposed to get out of the market and wait for the next setup. As you can see, if you did get out at this point where the market, you could still have make a small profit right here at this area if you did get out of this market when the market was at London. So that's number one. When you mark your Asian and London and you get your support and resistance, and you just took the trade, but the trade, instead of going to your support or resistance level, it start moving sideways. You're supposed to wait for the trade long enough till the London opens. Once the London opens, either you are in a win, you are in a taking profit, or you are in a losing. You're supposed to get out of the market and wait for the next setup. So at that point, I got out of the market. Then, waiting for my next setup, I took from that day, Friday. This is today. Yep, I think so. So yesterday, I got again my support and resistance level as usual. My support and resistance level right there. That's my support. That's my resistance, I mean. And this here is my support. My support. Okay. I took a trade. Actually, I took a trade and I won. Once the market was at this level, where's my gun box? I took my gun box and place it right here after this candle head close. I took that right there and mark my stop loss on the end of that candle. My take profit on my support area, and actually I won that trade, giving me a risk to reward 1:1. But it doesn't matter. People say that there's low volatility, but using GBP USD, the only thing you are supposed to worried about is your lot size. If you're trading using this other strategy, it's going to give you win rate of 100%. It's going to give you a small risk to reward sometimes, but sometimes it can give you like 1:5. If you subscribe to my channel and go back and check my previous video, I got a risk to reward of 1:5, and actually I won that trade perfectly. As you can see, that trade I took it. But the other thing that I want to show you with this market is that once the market hit this support and resistance, it rejected, meaning that I was supposed to go to place a buy position. So if I had a place a buy position like here, I place my buy position to my and a small risk to reward ratio, or maybe target like this level. I will still be in a lot, but I don't know what the market, once it opens on Monday, what it's going to do, but it could be a very risk move. Or maybe I don't know how the market actually will open on Monday. So why did the market actually do that? And using the other strategy is a 95% win rate. Why did the market do that? So I'm going to show you why did the market do that. So there's some tools that I'm going to show you how to use them. Maybe I'm not going to show you a full course on how to use them, because after this I'm making a video on how to use the tools, but I'm going to give you briefly why you can have a 100% win rate strategy but still make a loss like this. Now this, if I could assume that the market will come to put my stop loss below this area right here, say now this one here is my liquidity, so I'm going to put a lot size. I'm going to put my stop loss right using this area. I could have been definitely tapped out easily from the beginning. So to avoid that, I'm going to show you so that you can make your other strategy a 100% win rate. Okay, the first tool is called it's a site called tradingstar.com. On the British pound, you can just search GBP USD quote report and select the tradingstar.com. So on the Tradingstar, this report is given by CFTC. It's a legit. So this is what happened with this tool. It analyzes from Tuesday to Tuesday, but then the report is given out on Friday. Like on Monday, I'm going to get another report on GBP USD. I'm going to get another table showing what changes. So here is where you can see the commercial, non-commercial, the total, and non-reportable. So we are not going to use the non-reportable, not the total, not the commercial, but we are going to use the non-commercial, because intraday trading. So you're going to use the non-commercial. On the non-commercial table, we have the long, short, and spread. So on the long side, you see what big institutions are doing on buying, on selling, and how heavy are they on buying or selling. That's the spread. We are 40k on long, 146k on short. So we are on a short. That's why the market actually did that. The market did this. As you can see, the market is on a bullish trend. This is a bullish trend, but the market broke that trend and wait for a downward. Because what? Because the big institutions are putting heavy trades on the short side. That's why we broke right here. And then we went for a down. But for me, that's why I took that trade with the precision. I didn't guess. I knew that the other strategy would work. That's why I knew, and I took that trade with okay. Now when you come back here on the short, now what changes? This one shows the active. The changes show how active they are. On Friday, they were on the long side. They are removing their trades 1k. They are removing their trade, but the 32k, meaning that 32 trades are being placed on the moment, and the spread is 350. The spread actually doesn't matter, but what matters is how heavy. Like you can see on the short side, we are 32k on the long side, we are 1k negative, showing that the sellers are in control. The percentage actually matters. Sometimes the percentage actually matters. You can say make things easier, but you know what make things easier much better is when you use this kind of chart. Where is it? Let me show you. When you use this chart, not this one but this one, you could come just direct here to the non-commercial and press and look for their 70% up. Once a trade, either or a buy or a sell, is we're either 75% either on a long or on a short, but we are 75% and above. Don't go against that. Never go against that. Sometimes you are 50-50, meaning that you are when you are 50-50, meaning the market will go sideways. So if you really can handle that, trade, but the other strategy won't let you down, I'm telling you. And when you see on the non-commercial, we are 21%, meaning that the long side are much weak. So that gives you one way to know that that market you are supposed to sell either ways. Whatever strategy you are going to use, either you use other strategy or you use another strategy, but you know that that strategy won't work if you are going to buy. Another thing I want to show you is another tool that I want to show you to know that is the Forex Factory. Forex Factory, every trader actually knows that. Forex Factory shows us the news. Make sure to avoid those Trump things before Trump, because Trump can mess up your trade very badly. So the thing I want you to make sure when you're using this, you click on the time and make sure I'm in Kenya, Nairobi. So you make sure that the time is actually on where you are, so that you don't get messed up. First thing, you check on the time, then you click the saving changes. The other thing is you can come back on this area on filter and click it, the filter, then you come here, expected impact. You mark the red one and the white one. The white one usually show us the bank holidays, because here you are always against big institutions and bank. So make sure to mark the bank holidays and the red one for the high impact news. And this you can just let just that changes only matters. So the other thing, now you come back here, this area, this week. If you click that, you can just see the whole week, or you want to see only today, but I decided to show you the whole week. So on Sunday we had no news. On Monday we had card red news. So if there's this and you check the time, make sure that time, if you have a trade, get out of the market. That's the advice. So on Thursday we had a USD. And remember, when using other strategy on JPP USD, meaning that when the USD is affected, the JPP is also affected, and making the strategy sometimes complicated if you don't know if there's a news. Like on Thursday, this I'll make another video to show you how to use this one. So we have the focus. You see, we have the focus. We have the graph, previous, focus, actually, and detail. So what you're looking for here is previously. Let's say on Thursday GBP, on Thursday the USD we had 0.3. On the core PCE price index we had a 0.3%, and the focus we had a 0.3. And on the actual, what happened, what the news made is that it still made a 0.3, meaning that the market won't be affected. Okay, coming on the final GDP news, we had previously we had 1.6%. On the focus still made 1.6%, and on the actual made a 2.1%, meaning it increases more than the focus. If it increases more than the focus, meaning that the USD is going up, the USD is going for a buy, is going up. And if the USD is going up, the JPP USD will definitely go down. So now we had two confluence. The first one is the trade on the this one will be the third one. So showing that we were supposed to go for a sale. Some people even actually just trade the news. If they see that the actual is either goes up higher, they buy, or they sell. They actually trade. If people use that like USD, JPP, or USD, like Euro USD, they definitely bought. Every single trader bought. If you bought that, then you made a profit. So we had now three confluences on the secret code. The first one is, make sure do not allow your trade to go from the beginning of the London session to London session. Once the London session open and your trade that has not even hit your TP, get out of the market. Or if it does not even hit your stop loss or your TP, get out of the market. And that's the first rule. The second one, make sure to check on the non-commercial traders. Make sure you check on the non-commercial trader. And lastly, check on the news factory and check what the news is saying to be more precise. Okay, thank you everyone. Make sure you hit that subscribe button, and so that I could give you another video, another tutorial on some tools that will help you get from a zero to a hero, or make you more profitable, click that subscribe button, like, share.